Hello everyone, welcome to Macroeconomic Khan's quarterly sectoral preview. In this episode, we will look at what's in store for IT sector in Q1 FY2027 and what are the key takeaways for investors. Let's begin with a quick snapshot. Recovery might be delayed with macroeconomic uncertainty and cautious discretionary spending keeping FY27 and probably FY28 growth to stuck in single digit range. AI remains a near term headwind rather than a tailwind, driving productivity led deflation and pricing pressure, while meaningful revenue opportunities are yet to scale. Large cap IT companies are unlikely to revert to their historical 7 to 8% growth trajectory and may instead clock a 3 to 4% growth in the next few years. What's the scenario for revenue growth? Among tier 1 companies, Infosys and Tech Mahindra are likely to outperform within the large cap pack, while TCS is expected to post largely flat growth. HCLTech and Wipro could remain under pressure due to project delays, service weakness, and cautious client spending. Among midcaps, Persistent should continue to outperform, supported by company specific execution and stronger exposure to digital and transformation programs. Coforge is likely to deliver flat sequential growth, but including its recent acquisition of Encora may result in a 20% sequential constant currency bump in revenue. IKS is expected to deliver 3% sequential growth, supported by healthy momentum in the first half of the year. Birlasoft and LTM mostly likely to report muted quarter growth. Sagility is likely to see a decline in result by 6.2% sequentially due to seasonally weak Q1. What's in store for margins? While revenue growth remains weak, margins are expected to be relatively resilient in Q1 FY27, supported by weak rupee, cost optimization, pyramid rationalization, and AI-led productivity benefits. As a result, most companies are likely to report stable or improving margins despite a muted demand environment. Infosys may see a sequential improvement of 61 basis point, Tech Mahindra 54 basis point, HCLTech 8 basis point are expected to see margins expand, while Persistent may see a 25 basis point sequential improvement. On the other hand, TCS may see a decline of 127 basis point and Wipro 84 basis point due to wage hikes, investment, and operating deleverage, while Birlasoft could see the sharpest decline of 203 basis points sequentially. With these factors in place, here's our outlook and valuation for the sector. We remain cautiously optimistic on the sector as recovery continues to get pushed further out. The industry is grappling with a combination of macro uncertainty, geopolitical disruptions, slower discretionary spending, and AI-led deflation, resulting in another year of muted growth expectations. Divergence in growth, deal win, execution, AI positioning across companies is widening. While some companies continue to deliver superior growth through market share gains, large deal ramp ups, and strong vertical exposure, others remain constrained by weak demand, pricing pressure, and execution challenges. Consequently, investors should focus on companies with stronger growth visibility, better execution, and resilient deal pipelines rather than rely on a sector wide recovery. Among large caps, our preferred picks are TCS, Infosys, and Tech Mahindra. Among midcaps, we recommend Coforge, Persistent Systems, Sagility, and FL3I. That's all from our end for our quarterly results preview for the IT sector. What are your views on the same? Share them in the comments section. You can now access our in-depth reports for IT and other sectors on a real-time basis by joining the WhatsApp channel for the Macroeconomic Khan Research Center. The link is in the description. Alternatively, you can also scan the code on the screen or type research.sherkhan.com to get started. Thank you for watching. Stay tuned for our quarterly results preview for the other sectors.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.